How did Gautam Adani go from being the world's third richest person to being the seventh richest? There's a lot going on here in what is India's biggest financial story, the clash between Gautam Adani and the Hindenburg Institute. I'm Barkha Dutt, you're with the Mojo story. In short, if you've just woken up to this story, basically the Adani Empire had been accused of by a US-based short seller of encouraging tax havens, of not being audited properly, and of a fraud. That is the exact word that has been used by the Hindenburg Report. Mr. Adani has hit back and said that all of this is false, that the firm and the group is compliant, and it has described this report as an attack on India, suggesting that the report is designed to profiteer the Hindenburg Institute, making the investors lose money, and in effect attacking the Indian economy. It is an extremely technical and complex issue, and we're going to let the experts explain to us what's actually going on here. Is this an attack on India? Is the Adani Empire the same as India? Is this an attack on the Indian economy, the Indian markets? The Hindenburg Institute is accusing the Adani Empire of market manipulation, of running tax havens that it says amounts to a fraud. And the Adani enterprise is hitting back and saying this is basically an attempt to drag us down, insinuating that there is a foreign hand or maybe even a rival corporate hand. Let's introduce our panel of experts today as we try and decode for you, our viewer, exactly what's going on. Sanjay Jha, who's of course a Congress supporter and a critic of this government, joins us. This is relevant because he is being very scathing about the rebuttal that has come from the Adani Empire. Also joining us is a veteran business journalist and editor, Madhavan Narayan. Good to see you, Madhavan. Also joining us is well-known economist, Professor Arun Kumar. Good to see you, sir. Also joining us is Sandip Ghose. Sandip Ghose is a commentator and analyst and is very well versed in the corporate world, and maybe he can explain to us exactly what's going on. And finally, joining us is somebody whose domain it is to actually study the markets, Aveek Mitra. He's the founder of the Aveksat financial advisory firm. It's good to see you all. We hope to have Sunil Alagh with us in a moment from now as well. Okay, let's just step back and understand what is happening. Gautam Adani's organization has issued a 413-page rebuttal. Madhavan, if you had to make sense of this battle and explain it to somebody who doesn't understand financial markets, how would you describe it?
Well, Barkha, I think the first thing is not to get lost in the details of the accusations and counter accusations and look at what are the key issues at stake. First of all, uh, Mr. Adani and his group, still substantially family controlled, have an empire stretching to 10 listed companies. Most of it are family controlled, and yet becoming at one point, the third richest person on the planet, and mostly from investments that started out with, edible oil. Now, as a trader, now
Mhm.
the difference between Adani and Ambani Group, that's a wonderful way of understanding the whole thing, is that the Ambani Group has mostly built its own companies, whereas
Yeah.
the Adani Group has acquired a substantial, if not a majority part of the business by buying out businesses all of a sudden, growing meteorically over a decade. A lot of it is in the infrastructure sector. And
Yeah.
therefore, the question is, where did all the money come from? And how did Mr. Adani become so rich so soon? So, the answer lies in the fact that most of the investments have been in the infrastructure sector, in which, in clear alignment with the policies of Mr. Narendra Modi, and the fact that they both come from the same state, and there have been allegations of political linkage, make it very, very interesting.
Mm.
Also
But but
important
but
is
but if but if I may interrupt, since you drew a parallel with the Ambani empire, back in the day, Dhirubhai Ambani was accused of similarly benefiting from political patronage. I don't think there is ever sort of any sort of big business empire where there aren't whispers of political patronage. What,
exactly.
according to you, makes this case so different, in your
I
opinion,
think the
if it
key
does?
point, there are three key points to be noted since we don't have too much time and it's a very complicated case. Point number one is, what is the level of valuation of the Adani Group enterprises shares where mutual funds have been so wary of investing in companies in which LIC and has invested a lot, which is insurance savings of the middle class. And second question is how and what is the nature of the relationship between the State Bank of India and the extensive loans, humongous amount
Yeah.
of loans lent by Adani Enterprises. These involve public policy of systemically important financial companies. And third important point is because mutual funds had been staying away from a substantial part of the Adani Enterprises shares, except Ambuja Cement, for instance, which is
Yeah.
was already an established company, or so there are questions related to valuation of companies on whether a bubble had been created, which is where Hindenburg research is important, because by its own admission, Hindenburg is not an NGO. It is out
Yeah.
to hammer
It's
the
out to
share.
make a profit. Let's not beat around the bush. It's going to make a profit.
Yes, but they never hid it. The real issue is whether the shares are overvalued or not. What are the benchmarks and principles used by markets to assess Adani shares? What are the benchmarks, policies, rules, and regulations that are important
Okay.
from the point of view
Okay,
of
hang on, hang on,
regulation?
Madhavan. I don't mean to interrupt you, but you've given us the framework for the conversation. You've explained the allegation and the counter allegation. Let me bring in the others and I'll come back to you. Sandeep, basically, there seem to be three sort of tropes here. One, where did Adani get his money from? He's highly leveraged group. If mutual funds have not put in money, that means it's come from banks, it's come from LIC, and of course there would be by critics of this government in particular insinuations therefore of political favoritism. But as I will remind people, Mr. Dhirubhai Ambani had very much the same allegations for those of us who are old enough to remember those years. The second, of course, is that there's a suggestion of shell companies, and the third allegation seems to be that the auditing is not up to a kind of professionally accepted standard. On the other hand, you have the argument, you have the whispers of corporate rivalry, a foreign hand, an attempt to pull Adani down at the time when he's actually in the middle of trying to sell shares to get rid of some of this debt. Sandeep, how do you see it?
See, you've said a whole lot of things, and I'd like to distinguish some of the points which you made. You made the point about political proximity. There is
No,
no.
I'm not making that point. I'm saying the opposition. Yeah.
No. I said you corrected that point.
Yeah.
Okay, so starting from if you were to go back 100 years till now, no industrialists in India have succeeded, whether post-liberalization or pre-liberalization, without having the blessings of political parties. I don't want to specifically name people on January 30th, but there are organizations which have, due to their proximity, have come thus far. There are many of them. So that's a separate thing. And Dhirubhai Ambani was also never, he's also comes from the same state. So that's a given. You talked about auditors. I'm a chartered accountant myself, and there are certain rules in terms of what kind of audits you can take up or not take up, depending on the size of your firm. It could be construed if something goes wrong as a professional misconduct. But the fact is, you had the big fours auditing a Satyam and ILFS and everybody, so nothing is really kosher. It doesn't mean if you had a big four, it wouldn't happen. So there are 2 or 3 parts to it. One is this investment which Madhavan was talking about, why mutual funds didn't invest and why LIC invested. I don't think, that's also a very tenable thing. Mutual funds would have different objectives, the kind of returns they have to yield to their shareholders at within a certain time. LIC is not an investment company. LIC is not there in the business of yielding returns. They are, they would look at it in a different format.
Yeah.
For the legality part of it, I wouldn't get into. I am not an expert, but what I do know, people attribute a lot of things to. Could be SEBI has not yet proved its credentials, but what I do know, among all our institutions, RBI is one institution which is still very, very proper, and and they really look at the source of the money. So if RBI has vetted these things, I would place a lot of faith on that. But
so do you see this as a? Are you suggesting it's a hatchet job?
No, about the point Madhavan was making about Hindenburg, the same thing, short selling, if they tried to do this kind of a thing in the US, they would not have been allowed, because if they have interest in these companies, and try to create that, that would have been a very, I'm not getting into the hatchet job thing at all. I am, it may or may not be, Madhavan, that I'm not contesting that point. The point here is Adani is, as my friend Vinayak Chatterjee, who is one of the foremost experts in the infrastructure sector, has made a point that India needs a lot of Adanis if we have to really go and have these kind of investments in infrastructure. And you have to have these entrepreneurs who will take that risk. Adani's investments are mostly domestic facing, and they are also assets. One of the things which people at the end of the day, as Madhavan was saying about the Ambanis also, they have created assets. Valuation is a different game. But if you see, they have all created assets, and Adanis are creating assets. Everything is not acquired by them. Today, the energy park they're building in Kutch is not acquired. Okay, they are not doing a Tajpur port or other ports.
Let me open up what
There's
the
a
point.
there. So
Yeah.
there is,
Sorry.
I'll just conclude quickly. So it has to be seen from that point. And where you said the hatchet job, what will happen is if people take on, say, an Adani in this manner, or if they are pulled down, tomorrow you're not going to get these sort of investment. India would need 20,000 crore investment year on year.
So therefore, you don't find it grandiose when he says this is an attack on India. You can see the dots connecting there. In your opinion, if someone as powerful as Adani can be sort of attacked in this way, then what would happen to, let's say, smaller players is I think, Sandip, the point you're making. Can I just open this up now for Aveek to come in first, then Professor Arun, Kumar, and finally Sanjay? Yeah, Madhavan, a brief interjection. I want to go to Aveek. Madhavan, can we unmute Madhavan?
Sandip?
Yeah. Yeah.
I have a quick point to make on what Sandeep Ghosh said. The fact is that in the US style shareholder democracy, activist investors and short sellers are a very important part of the ecosystem. And even Hindenburg has previously called out, it's what I call the Me Too movement of the share market, where somebody calls out somebody for not doing things properly.
So it's interesting.
Nikola,
it's interesting.
Nikola was one company which Hindenburg called out very brightly, and he's not a lone ranger or some maverick.
Yeah, let me just respond to
he's
that, Madhavan.
He's a scavenger on Wall Street.
Yeah, and I was just going to say that on a different program, looking at tech layoffs, someone made this point about activist investors and how they are actually driving prices, value of a lot of these big companies down. So is that what's happening? Is that kosher? Let me bring in Aveek Mitra, who actually does this professionally. And on Twitter, Aveek, you made the point that while you don't specifically track the Adani share, Hindenburg's intent may not be above board. Madhavan makes the point that they've been transparent.
I would like to object to one point of comparing a scavenger or a short seller with the Me Too movement. I don't assume a Me Too person.
Yes, I think that's. I think I should have said that before you did. Yes, I think I should have said that before you did. Yes,
personal lens, and you compare it with Me Too, I think you're undermining Me Too.
No, and I think let's not compare apples with oranges. That is a social justice movement. This is about shorting stocks. That point. Okay, Madhavan, hang on, both of you. Now, I think that point, I tend to agree with Sandip. Let's be very sober about our analogies. Just from that one point, the rest of your arguments are taken about activist investors. Aveek Mitra, do go ahead, sir. Can we unmute Mr. Mitra, please? I think you're muted at your end, sir.
Yeah, can you hear me now?
Yeah, go ahead.
So I think I will start it in a very different way. Let us split it into three parts, right? That how the retail investors are affected by this, whether the allegations have any merit, and three is that what is the road ahead for either Adani or India, or is it Adani equal to India? That is how somebody was projecting. So now, as far as the retail investors are concerned, I think the retail investors have not been affected because the retail investment in Adani stocks are very, very few. Adani, most of the says in most of the companies, if you see, except Adani Power and Adani Port, the retail investment is less than 2%, and you may not find more than 1 lakh, 2 lakh investors into Adani company. That is number one. Adani companies have gone up very, very sharply, defying gravity for last almost 3-4 years. Now, that time, no questions were raised. Now, suddenly, a short sellers report has come, and I think the way we are reacting as if the all hell broke loose. Now, short selling is a pretty common thing in the global world, and short sellers bring a different perspective to a particular reality. We have believed in a particular reality that Adani stocks can only go up, up, and up. So it is not necessarily the case. There may be another way to look at it. The second part is that the bank loan which you are talking about. Now, as the CLSA has come out with a report very recently, it mentions that Adani has about 2 lakh crore of total loan. Out of that, 80,000 crore is from Indian banks, and the rest are either in bonds or procured from abroad. Out of this 80,000 crore loan, private sector banks and public sector banks have a disproportionate share. I think public sector banks have about 70% shares, and private sector has about 30% or even less. From the total Indian banks perspective, it is about 0.5 to 0.6% of the total loan book. So I don't think there is a systemic risk coming to the banking sector out of this Adani fiasco. Even if the Adani stock goes to zero, I do not think that presently the way the bank's balance sheets are, it won't create a serious problem. But one issue still remains unanswered is that what is the kind of off-balance sheet exposures are there into the Adani stocks and Adani loans, which has been taken from outside in this kind of by this kind of Indian banks. So that part we do
So
not
can
know.
I
Market is
can I jump in? If I were to summarize, you're saying retail investors are not going to be hit. That's good news, I think, for ordinary people. The other thing you're saying is this is an overreaction on both sides. For the Hindenburg Institute to link the story of India to the story of Adani is an overreaction. For the Adanis to link a critique of his firm, even if designed with one eye on profit, to the story of India is also an overreaction. Would I be fair in distilling your view such, Aveek?
Yes, yes, absolutely. Because when a short seller writes a report, also he doesn't write that everything. He will emphasize on every negative things much more, magnify it much more. Similarly,
Yeah.
when Adani will respond, he will magnify to its positives. Right, I have done in India, I have created assets, and which are to a large extent is true. It's not that they are creating assets for India as somebody else was telling. Right. So both sides are
Yeah.
having a call, but I think the overreaction is because in India, every time, every house actually are giving buy reports on anything. In India, you will see hardly any kind of sell report on anything. And I think if you remember correctly, in 2011, somebody came out with a report on India Bulls, and in 2014, that guy got arrested and he was spent in jail for 15 days.
I do remember that, and I think you've given us some very important context. Let me bring in Professor Kumar and Sanjay Jha, and then go around the panel again. Professor Kumar, do go ahead. You heard from somebody who spends his life studying the financial markets. This is one colossal overreaction on both sides. We are not really talking about small investors, retail investors losing any money here. We're talking about a billionaire whose stock has fallen literally from being third richest man in the world to the seventh richest man in the world. So what's at stake here, according to you, in this debate?
Barkha, what I see, uh, can you hear me?
Yes, sir. Go ahead. Yes.
What I see is that this is business as usual, but it's at an astounding level. Large number of business houses in India actually resort to many of the things that the Adanis have resorted to, whether it be cronyism, where they have links with the powers that be, and on that basis they expand their business. Now, what I think the Adanis have done in the last few years is something that nobody else has managed to do in such a short time. So the comparison with Ambani's, I think we have to go back to the late 70s, early 80s. I remember that the Ambani's, the Reliance Group was doing very well in the early 80s, and suddenly the stock collapsed in the stock market. And overnight, 22 crores came into the stock market and the share value went up. I think that was 83 or 82 or something around that time. And after that, nobody has attempted to bring down the stock prices of Reliance, as far as I know. The linkage with the political establishment has been very important for anybody. Now, what it enables you to do is to raise money from the banks and the LIC, whether it be State Bank of India. If you remember, when Adanis were investing in Australia, when I think Mr. Modi had gone there, and no other bank was willing to give money. It is $1 billion that the State Bank of India gave,
Yeah.
and that showed, the closeness. Now, that also what it does is that when other investors see that somebody is close to the powers that be, then you realize that they're not going to fail, and therefore you give more money.
But I think, as you've pointed out, political patronage and business, big business, these have always been fellow partners on an interlinked journey, and therefore, Professor Kumar, let me just bring in Sanjay Jha, and I'll come back to you, Sanjay Jha. What's the big deal
Just to
here? Complete your point, Professor Kumar.
my point that typically you look at the gearing ratio, in any investment. If the gearing ratio is high, that is, you have more debt compared to the equity, then in a downturn, your company will collapse, because then you're not going to be able to earn the interest to be able to service the debt. So
Yeah.
a high gearing ratio is a risky proposition. But you see, the risk is mitigated by the fact that that the state will back you, or the powers that be will back you, and that enables you. So I think Adanis had been called out even recently by the Fitch related company about 6 months back. And that time also it was said that they are over leveraged. But
Yes.
then, they what happened was Qatar sent in some money. I think there were some investors in Qatar. And why did they bring in money? They brought in money because there's an assurance that, given the closeness to the powers that be, it's safe. So I think this closeness to
yeah, so
political
the closeness,
very
but
important.
as you yourself pointed out, and let me take that to Sanjay Jha. Historically, we have had business leaders needing and benefiting from political patronage. That's why Mr. Dhirubhai Ambani was accused of it in his own time. I saw a very interesting piece by T.N. Nayanan drawing parallels with how there was a similar sort of effort to shock the Reliance stock as well. I'm sure all of you have seen that piece. So Sanjay, what's actually going on here? You've been lashing out. Who are you holding accountable for this? And you heard Aveek, Mitra, the retail investor is not suffering. So what's really at play here then, according to you?
Well, Barkha, I think it's about time we took a deep pause on this whataboutery about Dhirubhai Ambani and his proximity to previous political powers, because when it comes to capital intensive projects, large infrastructure, programs, there has been a give and take between the political powers at the center and various corporates, not just Mr. Ambani. In fact, one of the big names they're missing out is in the SR, but that's not the purview of this conversation.
And I don't want it to be an Adani conversation.
Yeah.
I'm just being cynical and saying historically we can pull out any number of stories from the hat where there have been political links to big business houses. What's different? Why are you, Sanjay Jha, therefore so disturbed at what's happening?
Well, I'll tell you why I'm disturbed and why I think you should be disturbed, Barkha, and why I think people watching your program should be extremely agitated, is the spectacular scale of chronoism. This is plutocracy, this is crony capitalism with all its brazenness at an extraordinary level. Let me give you some data points, and I think they are relevant to this conversation because they haven't come up as yet. Number one, here is a group that has grown 85% of its wealth has come in the last 3 years. I mean, Mr. Adani from nowhere has become the second or the third richest man in the world. And 85% of that came in 3 years, and everybody believes is kosher. Number two, in the year that has gone by, 80% of India's market capitalization growth on the stock markets came through one group. And I want to ask, where was the finance minister? Where was SEBI? Because let me tell you, even a kindergarten commerce student will tell you that's extremely odd. But we were all quiet. You know why? Because the elephant in the room is what nobody's willing to say, Barkha. And the elephant in the room is the proximity of Gautam Adani to Prime Minister Narendra Modi. That is the one singular defining characteristic of Mr. Adani.
What makes that proximity different from, and I want to take it to Sandip, but my question to you briefly, Sanjay Jha, is to you. It's to you. My question is to you only. What makes this proximity, the allegation of this proximity, different from the proximity of other business groups in the past, including on a government that you supported, where NPAs, non-performing assets, were allowed to thrive, as we know, also because of political pressure from the party of the time on banks. What I'm trying to say, and forgive me, maybe I've just been a journalist for too long, is that what is new about, sadly, about the fact that big business needs political patronage in our country?
Well, I'll tell you what Barkha is new and what is different is that the markets are not buying this hogwash. The attempt by Adani Group today to sell, India's status, and this is about a national assault. The BJP playbook, by the way, so we know who's even scripting these defenses, has been rejected by the markets. Barkha, look at where Mr. Adani's group stands today. It was 50 billion wipeout as of Friday. It is 66 billion as on today. And as somebody who's been a banker, so I'm pretty much familiar with profit and loss statements and balance sheet. So let me tell you this. I also happen to be, by the way, a lot of people don't know, a PhD in economics. So let me tell you why it's stunning and shocking that India has ignored Gautam Adani so far. The truth is that you can only manipulate your stock price and get away if the regulators have looked the other way around.
Okay,
I want to tell, no, 1 minute.
I have to get the others.
One last point. Every acquisition made today has been told to SEBI over almost 2 years ago on these, what are called as suspicious transaction reports. Who does SEBI report to?
I would like to think of SEBI as more autonomous than you're suggesting, but let's bring but okay, there's that cynical laugh. Of course, you're speaking, we can't ignore from a political perspective. I do want to get it Sandip, then Madhavan. Sandip, go ahead.
See, first of all, I think Professor Arun Kumar has said this brilliantly in terms of the political, proximity and otherwise. That's how it has happened. And we only keep talking of India. It happens around the world. If you look at the Rockefellers and the Rothschilds and everybody has a political connection. So it is a question of where, if you're taking that unfairly to create really a bubble, as people are talking about. And I don't consider when you're creating assets are bubble. There can be a question of this valuation point, whether the valuation is higher or lower, and that varies. And I wouldn't be too worried for Mr. Adani to slip from third to seventh. That's just like he rose. These things might change if you are having this conversation 1 week later. Stock markets don't decide themselves in 3 days. Aveek would be much better placed than me to comment on that. So that can change. So those are all, and therefore conjectures as to who is close to whom. These have happened even in the past. So those are not the moot point. Whether the point which we are getting at, whether it's going to hurt India, it's not a question of whether Adani is equal to India or vice versa. It is whether it's going to hurt India if these kind of assaults are made. I would think yes, because as somebody said,
why do you think it's an assault? Why do you think it's an assault? Why do you think
it's just crashing the investment,
shorting the share?
Yeah. So if that happens, then you're going to have investors who are shy. And I don't also buy the point about SEBI, etc. I know this person personally. She has come from ICICI, the wife of an ex-colleague, not because of that. I know those sort of credentials of these sort of people. They're purely professional. She is not a political appointee, which has happened earlier. And that's a big change, which even the Modi government's critics should admit. First time they've got a non-political person heading there. RBI, let anybody in this panel say, RBI, despite whatever talked of phone banking, etc., RBI is a corrupt institution. RBI has stood its ground. So all those checks and balances are there. And finally, the assets. And last bit, if you're talking about LIC, as an LIC investor, they are not looking for return. You take LIC policies to get it in a contingency later on. And the money which is lying there, if they get a valuation, they are willing to wait. If they get a higher valuation, it's far better for the country and LIC than trying to look for short-term returns.
So let me bring in Madhavan now. LIC has, of course, given a statement today, Madhavan, and they've spoken about how they will have some questions, they will raise them, but they have had no issues, according to them, with compliances. Even on debt, they've said that the Adani Group has followed the rules. Their exposure is, if I remember correctly, a little over 36,000 crores. They have issued that statement today. Madhavan, when Aveek Mitra says the retail investor is not going to hurt, do you believe the India story can be heard, or do you agree with Aveek Mitra that this is all one gigantic overreaction? There's probably a whole lot of corporate shadow boxing at play, and for the layperson, it probably doesn't matter much.
No, I would disagree with. I really liked what Professor Arun Kumar said, and also Aveek Mitra. Between them, they've covered a lot of ground. But let me address Sandip Ghosh's issue. It is false to say that LIC's investors do not have returns. First of all, annual bonuses are declared by LIC on policies. LIC has had its own mutual fund arms and also invests in equity. And you cannot have equity investments based on principles of infrastructure debt. Equity is supposed to give you returns just like a mutual fund. A second point is in any institutional processes, and let me remind that SBI and LIC are systematically important institutions declared by the Government of India, and therefore 3 P's are followed by banks: cash, collateral, and character. And 3 P's are followed by investors: people, processes, and principles. And you need to examine institutionally whether LIC guidelines have been violated, whether the benchmarking has been done so that investments made into Adani Group have been disproportionate based on the same principles to other companies, and whether there has been a singling out as a beneficiary for this. The difference between the Ambani age and right now is that earlier it was about license and permit. Here it's about allocations, approvals, and financing. So there has been only a.
But may I say?
Yeah, let me just complete in this, Barkha.
May I just say cynically?
I love analogies.
Yeah, okay.
I love analogies, and the fact is that I use analogies to illustrate to common people the fact that shareholder democracy is analogous to political democracy. And in that sense, if accounting principles have been violated, I would like to call it financial gaslighting. We need to examine with mature senior investment professionals based on valuation and allocation.
Can I get on that note, get Aveek Mitra in, since we're talking about financial professionals? Go ahead, Aveek, and then Professor Kumar. Go ahead, Aveek. Mr. Mitra, I think you might be on mute. Sanjay, give me a second. Go ahead, Aveek.
So let us talk about LIC for the time being. So yesterday, I think, like all of you, we have seen in the paper that LIC's value of investment has fallen by about 16,000 crore or 17,000 crore because of the fall in the price in Adani stocks.
In the share.
So Adani stocks value into the total was out of 43 lakh crore, which LIC manages. Yesterday's value was 83,000 crore. Now we are assuming one thing, that 83,000 crore is the price at which LIC has invested those. It is not like that, because LIC has invested these two Adani companies over the years. So when Adani stocks have gone up by 5 times, 10 times, 20 times, LIC's value of investment has gone up by also 5 times, 10 times, 20 times for at least a part of their investments. So at least I was talking to some of my friends in the investment circle. So he was telling that maybe LIC's actual investment into all these companies put together may be about 30,000 crore rupees at the most. We exactly don't know at what price, at what point of time, at which price, on which stock of LIC Adani has been bought by LIC. But comparing this 87,000 crore to the loss and assuming that this is actual loss taken by LIC on its books is something not right accounting from the accounting principle basis. You should take from the base price on which LIC has invested, number one. And number two is that LIC has invested like this in many other companies. And there is a larger discussion can be made about the kind of companies on which LIC make investments.
So what do you think, Aveek, is the most disturbing thing that needs more public debate? You seem to be suggesting that all of the hand-wringing over LIC is also misplaced. There could be a larger debate on why LIC invests in these companies at all. But Is there anything in the Hindenburg report that leaps out at you?
Yes, I think one area where SEBI has to take really have a look into is that the small holder, the kind of holding structure on which Hindenburg has pointed out, and secondly is that how the money has been sourced in making those initial investments. So we are not an investor into the Adani stocks. We have never invested in Adani stocks, and we have no plan of investing in Adani group companies. So let us make it a disclosure first, because as the SEBI registered advisors, we have to make this disclosure.
Sure.
So now the point is that suppose I wanted to become an investor into an Adani company, or say like any other company, for our investors, for the portfolios on which we advise, then we would have looked into that who are the promoters, where
So
from they
where
got
did
the
the
money.
money come from? Which is where we are
That is
back
an
to.
area, I think.
Yeah.
Yes,
Okay.
that is an
Professor
area where
Professor
SEBI
Kumar
has
and
to
then
look
Sanjay.
into.
Sorry, Professor Kumar and then Sanjay. Professor Arun Kumar. Yeah. Can we unmute Professor Kumar, please?
Yeah.
Yeah, go ahead, sir.
Yeah. Stock markets work on sentiments. And when the stock market sentiments go down, it affects everybody. It's not just Adani's. So while it is the case that Adani's may have lost a lot of money, others may also lose a lot of money because of the decline in sentiments. And Adani's being as big as they are, that will affect the sentiment of the stock market quite severely. And what we see is that, in India, for instance, during the pandemic, when the economy was stagnant, the stock market rose dramatically. And that was because I think the positive sentiment that had been created by the government and by the investors, that, the mutual funds were investing there because the bank interest rates had come down, etc. Now, if this sentiment gets affected, then investment rate in India, which is already low, will actually decline further. Private investment has not been coming forward at the same level as is
Yeah.
required. In 2012-13, it had peaked at about 36% and then had come down to about 31-32%. So we need more private investment. Public investment is only
And you
about...
believe, therefore, that it will be hit, different from Aveek, who thinks that it's a little bit of a storm in a teacup. Professor Kumar, complete your point before I go to Sanjay Jha. Yeah.
Everybody's right that the private holding of the retail investors is very small, but there are other investors who've been investing, and if they get affected by the sentiment, then I think the various companies, including the Adanis, they will get impacted further, and that will not be good. Given that the world is heading towards a recession where the investment climate is already on the decline, this could add particularly to the India story. And the India story that was looking a little bit more positive, that could get dented. Also, the point about LIC and about the State Bank of India, if they get affected, then they do affect the LIC's depositors, the State Bank of India depositors, and so on. For instance, the spread between the lending and the borrowing, that could go up as the State Bank of India. So there could be some concerns there also.
There could be repercussions. Sanjay, you were wanting to come in before. Go ahead, Sanjay Jha. Can we unmute Sanjay Jha?
Yeah, Barkha, my two short points. One of the aspects that I think anybody who's read the entire Hindenburg report will know is the conversation about the number of shell companies abroad and the family nexus that runs these companies. Now, it's pretty obvious, it's hardly magic or music to anybody's ears that this is a daylight highway robbery prima facie. And if this is not investigated, let me tell you, the so-called bubble that we're talking about, the India story, it is a manufactured bubble that will explode on our faces. A very important point that nobody's again mentioned is the acquisition of a lot of assets in India by the Adani Group that has happened on account of the connivance of investigating agencies that have ensured that the asset valuation have been low. And these are on the public domain. They are hardly a secret. How ED and CBI have played an instrumental role in many a haircut that has resulted in the Adani Group today becoming humongous. My last point, I think, is the most fundamental of the conversation. What does the Hindenburg report say is what I think people talk in drawing rooms in India. And let me quote that. Let that be the final line from me. Adani Group has been able to get away and operate a large, flagrant business in India in broad daylight, largely because investors, journalists, citizens and even politicians are afraid to speak out because of the fear of reprisals. So the question we need to ask, who is this big threatening authority that has frightened everybody from speaking out? That's the point.
Okay. All right. Let me give quick last words to Madhavan and Sandip. Madhavan, go ahead.
Yeah, my point is very simple. Patriotism is not a substitute for institutional governance, whether it is investment by state-owned institutions like LIC or in allocations of funds for infrastructure. So there are principles and processes to be followed that have been violated prima facie, and that is for investigation by a joint parliamentary committee at the political level and SEBI at the regulatory level. We need both. And valuation may not be high enough to shake up the markets, and that's good news for the middle class, but it doesn't mean that a violation of a rule can be forgiven so easily. We need to look into that. And also, let's treat this as a lesson or a wake-up call in corporate governance. Just like in a political democracy, opposition parties have a right to accuse the government. In a corporate democracy, hedge funds and activist investors have a solid place, and younger generations of Indians will have to form new kinds of vigilance groups. And that is why I called it as just as there are rights to be defended for women, there are rights to be defended for investors.
Yeah, except the big difference here, again, to underline the gravitas of the Me Too movement with this is that this is an institution that seeks to make commercial profit as opposed to, and very different from women who are only seeking justice. I just have to keep reiterating that. I have to give Sandip Ghosh a quick last word. We've got to close after that. Sandip, go ahead. Madhavan is talking in terms of a JPC. Sanjay, you're saying, it's daylight robbery. Aveek and Arun, I think, have much more sort of seasoned, perhaps cynical sort of impressions of both market and politics. Sandip, last word to you, quickly.
Last word is, I will not get into either the rhetoric or the hyperbole on this issue. What I would not worry about Adani growing in 3 years, what say Reliance took 10 years, is because that's the pace of life today. All your startups and everybody are growing in that kind of a pace. So the pace of life has changed. So if people have to grow, they have to grow in that short time. And that's what India needs. And one of the things which people don't realize, if no country has progressed without 2 or 3 such really big conglomerates. And so if the government has been backing them, I think there's a good logic behind it. Now, as far as breaking rules, that is something for anybody to see. Nobody's justifying that. But today we are speaking on surmise, on Hindenburg Report. Let our people come up with this and say, yes, these are the violations which have happened, and then by all means do. But otherwise, for everything, if we go on appointing a JPC or running to the Supreme Court, then you're not going to have any kind of entrepreneurial efforts in this country.
Okay, we'll have to leave it there. But as I was listening to you, I was reminded, of course, of the fall of Chanda Kochhar, who at one point was considered one of the big sort of icons of our time. And we have our history, unfortunately, is replete with stories of compromises, of how money is actually, who gets debt, who doesn't get debt. This is not the first story. There have been many before it. There will be many after it. I know I sound cynical. I think for the layperson, what matters is, are their savings, are their investments in the market, are those going to be insulated? So far, Aveek Mitra is suggesting that there will be no fallout for you and me, and may it stay that way while this issue is investigated without rhetoric and politics. Thank you very much, Professor Kumar, Sanjay Jha, Sandip Ghosh, Aveek Mitra, and Madhavan Narayan. Pleasure to our audience. Thank you for watching. See you tomorrow. It's great to see you here. Thank you for watching our work. If you haven't subscribed yet, don't forget to click the bell icon and subscribe to Mojo Story and support independent, robust journalism.